The evolution beyond indexing. Passive investing revolutionized how the world builds wealth. But what if there's a smarter way? One that blends the discipline of indexing with the precision of active strategy. Enter smart beta and factor investing. Strategies that promise market-beating returns, lower volatility, and tailored risk exposure. Before we dive in, make sure to hit subscribe to get professional-grade insights on next-generation investing. Smart beta and factor investing. Advanced passive investing explained. What is smart beta? Smart beta is not traditional active management, and it's not pure passive indexing. It's a rules-based approach that selects, weights, and rebalances assets based on proven factors. Topics. Smart beta defined how it differs from traditional cap-weighted indexes. The shift from traditional market cap benchmarks to strategic factor exposure. A brief history of factor investing. Factor investing isn't new. It began with academic research. Eugene Fama and Kenneth French added value and size to the capital asset pricing model. Today, there are dozens of investable factors. Topics. Fama-French three-factor model evolution to multi-factor models. Institutional adoption. BlackRock, AQR, Goldman Sachs. The core investment factors. There are 5 primary factors that have shown persistent outperformance over decades of data. Breakdown. Value. Buying undervalued stocks. Size. Small cap premium. Momentum. Winners keep winning. Quality. Strong balance sheets and profitability. Low volatility. Stocks that fluctuate less but perform well. Smart beta vs. Index funds vs. active funds. Think of smart beta as the middle lane, offering the cost benefits of passive with a rules-based approach to outperform. Comparison. Cost comparison of smart beta ETFs versus traditional index versus active mutual funds. Performance studies and persistence of alpha transparency and predictability. Subscribe now for detailed ETF breakdowns in future videos. Building a smart beta portfolio. Smart beta isn't one size fits all. You can target a single factor or blend them for diversification. Topics. Single versus multi-factor strategies. Combining factors for complementary exposures. ETF examples from Vanguard, iShares, Invesco, Schwab. How to choose based on goals and risk tolerance. When smart beta works and when it doesn't. Every factor goes through cycles. The key is knowing when to overweight or underweight a strategy, and how to stay disciplined. Topics. Factor performance in different market regimes, timing challenges and behavioral pitfalls. Importance of long-time horizons, costs, tax efficiency, and risks. Smart beta ETFs may cost more than plain vanilla index funds, but are the benefits worth it? Topics. Fee ranges, 0.04% to 0.75%. Tax drag, turnover, and hidden costs. Bid-ask spreads and liquidity risks. Smart beta for retirement accounts and long-term goals. For long-term investors, smart beta strategies can offer a more efficient path to growth. But you need to align the approach with your timeline and needs. Topics. Strategic use in Roth IRAs, 401ks, and taxable accounts. Risk-adjusted returns and sequence of returns. Risk smart beta glide paths for retirement planning. Real-world examples and case studies. Let's look at how real investors and institutions have applied smart beta successfully, and where they've made mistakes. Topics. Factor ETF performance comparison, MTUM versus SPY, QUAL versus VTI, etc. Case study, young investor versus retiree, smart beta during COVID, inflation, rate hikes. Subscribe now for upcoming ETF reviews and tactical updates, criticisms and debates in the industry. Not everyone is sold on smart beta. Critics argue about data mining, overfitting, and performance persistence. Topics. Critiques from bogleheads and traditionalists. Issues of factor crowding and timing. Regulatory and product proliferation concerns. Smart beta in emerging markets and international exposure. Factor investing isn't just for U.S. stocks. International smart beta strategies open new frontiers, but with different risks. Topics: country and currency factor risks. Factor persistence globally. Regional ETF products. Developed versus emerging markets. Custom factor investing and direct indexing. Technology is making it possible to design your own smart beta strategy with fractional shares, direct indexing, and tax optimization. Topics: how direct indexing platforms work. Schwab, Fidelity, Wealthfront, personalized factor tilts, tax loss harvesting advantages, future of smart beta, and the rise of AI-enabled factors. The next frontier: machine learning and real-time signals. Is AI the future of smart beta? Topics: AI and big data in ETF design. Sentiment analysis, ESG integration, alt data factors, new ETF launches by BlackRock, Wisdom Tree, ARK. Smart beta for institutions versus individuals. Pension funds, sovereign wealth funds, and endowments are using smart beta to fine-tune their strategies. Should individual investors do the same? Topics: strategic versus tactical allocation, portfolio completion, and overlays behavioral finance and decision simplicity. Is smart beta right for you? Smart beta and factor investing are not magic bullets, but they offer a powerful way to tilt the odds in your favor. Closing: match your factor exposure to your goals. Keep costs low, stay diversified, and think long-term. Use data and discipline over emotion and hype. Smart beta and factor investing. Smarter strategies for smarter investors.